Good afternoon, everyone. Today I'm chatting with Arturo Prestamo from Santacruz Silver. In today's interview, we discuss Santacruz, which, quite frankly, guys, has been one of the hottest stocks in the Canadian junior markets over the last 12 months, with the stock price up over 350% year to date. That's because the company struck a pretty interesting deal with Glencore that required a little bit of debt, which they recently restructured, and they are in the process of hopefully paying off within the end of the year. Not to mention fantastic production results, which we're going to get into. And I think that if you are interested in a, we'll say, mid-tier silver producer, which looks like what they are heading towards, or you just want to see a roadmap of what successful companies look like, this is probably an interview you're going to want to watch. All right, everybody, enjoy the show. Arturo, thanks for joining us today.
My pleasure. Thank you for having me here, Steve.
So let's start off talking about what's happening in the precious metals market. As we can see here, the price of silver, it seems to be showing more and more momentum. Now we're getting close to that $40 level, which I think is a key level. What's your current outlook on silver and precious metals in general?
Well, I agree with you. Actually, I think that silver will keep moving forward towards the $40 level, consolidating there. And the fundamental facts are easy to understand. No, the demand for silver is higher than the production, and it's been that way for a few years now. So I think it's about time that we are going to be seeing silver improving here in the next coming months, and definitely making a floor at 40, even higher shortly.
So Santacruz Silver, you guys have properties in both Bolivia and Mexico. I want to sneak in a quick question about the general environment in Mexico before we move on to Santacruz Silver, and that is with Claudia Scheinbaum, who's I guess she's not really a new president anymore, but she recently came out and said that there's going to be no new mining concessions in Mexico, and that existing concessions will be subject to further environmental review.
Right.
In your view, has Mexico become riskier to operate in?
No, well, that's a good question, Steve. Actually, I feel it's pretty much a continuation from President AMLO's policies towards the mining industry, more so to the open pits. That same policy of no new concessions, it's something that she's just keeping in place for the time being. It's nothing new, but I don't see the country becoming riskier with regards of our industry. Is Hopefully in the next coming years we can see a switch or change into this kind of policies. But I don't feel it's a riskier situation than the previous years. Mexico still is and will be a strong jurisdiction for mining, and definitely for the foreign investment.
I want to ask you about Santacruz Silver. It's the first time we've had you on. Santacruz Silver is obviously a popular name amongst retail investors. What's the high level overview of the company for those who are sitting down and watching this interview and they don't know anything about Santacruz Silver?
Well, we're a silver and zinc producer. We produce close to 8 million ounces of pure silver a year, and north of 100,000 tons of zinc a year. So silver equivalent, we're in the 18 million ounces, more or less, silver equivalent on a yearly basis. We're cash flow positive by all means, and we are just amortizing or finalizing our final payments to the all the assets that we bought from Glencore back in March 2022. We're making two more payments, 7.5 million, one in September and the final one in October. At that moment, we'll be technically free of debt. The company has no streamings, no royalties. EBITDA is strong in the 110, $120 million for the year. So I think it's a very interesting company for us. The moment for these times for us, it's very important. We also have another property, brownfield, that we're going to be thinking about how to build that property soon. That will give us organic increase production. So I think it's a good time for us, and happy to see that metal prices are definitely on our side for the time being.
So I think that names like yours are very interesting when a commodity really starts to increase, because it's like you have this debt that's fixed. So if you're an investor, you're not so concerned about dilution, right? It's not like you guys have to go and raise, well, in your case, you guys don't have to raise a whole bunch of money because you guys are generating cash flow, which is, those are always kind of the interesting names when the price of a commodity goes up. You got a producer who bought assets in a, we'll say, a down market, or with the price much lower, of which they took on a fixed amount of debt, and now they have the ability to pay it off thanks to those higher prices. So maybe for our audience, if you could just walk us through how much that debt started out with Glencore, or how much you guys paid for the assets, and how much of it remains, and sort of what that timeline looks like to get that paid off.
That's a very good question, Steve. And yeah, I would love to walk you through that. Well, the original terms were on March 2022 when we acquired the assets. It was they were four, let's say four items that were considered in the share purchase agreement. The first item was the catch component. Catch was meant to be paid $110 million over 5 years' time, 22.5 million every year. Then you have all the value-added tax that was incurred by Glencore when they were running these mines, which account for around $56 million. When we got those value-added tax back from the government, from the Bolivian government, we should return those monies to Glencore. So those are $56 million. Sorry. Also, they left $9 million in the net revenues, net proceeds, and in the inventory. Once we ship those concentrates out and we collect those monies, we should return those monies to Glencore. No? And finally, all the assets have a 1.5 NSR, which technically calls for around $10 million a year. That was the original terms. Those were the original terms. Then in October last year, October 2024, we announced the restructured terms, where it's a very simple structure. It's a catch component that calls for $80 million starting payments in November 1st, 2025, where you should be making $10 million payment every year, or you can choose to accelerate those payments under a $40 million payment to be done before November 1st, 2025. We choose this one, so we're already halfway there, more than halfway. We still have 15 million to go. 1.15. We're going to be paying 7.5 million in September, and the balance on the last week of October. So we'll be in November 1st getting the full catch consideration concluded. No, so that's one item, and the second one is what we call CVRs, conditional value rights. Those are up to $77 million, and the condition for those to kick in or to trigger payment on to Glencore are just very straightforward. When zinc crosses $3,850 per ton, at that moment we'll be paying around $1.3 million a month to Glencore, no? Until you pay the full $77 million, right? If zinc comes down at any moment, you stop paying, making those payments, and that will last for 9 years. No? So, in the other hand, we got rid of the NSRs. We have no more NSRs across the company. So you're saving $10 to $12 million a year now. We kept the $9 million of inventory that was left when we signed the original agreement, and we kept as well all the value-added tax that we can collect, or that was left by Glencore in 2022. So that's $56 million. Those three components, if you add them up, they are close to the $77 million, which is the same as the conditional value rights. So you're keeping monies coming into the company. Just to give you a reference, over the last 15 days, 3 weeks, we collect around 60 million bolivarianos in value-added tax. And today our treasury is strong. We have a treasury north of 65 million US dollars. So making the 7.5 million payment in September and the following one in October will not be a problem. So that that has been definitely an important milestone for us as a company, as your balance sheet is now very strong, very robust. You have no debt other than the Glencore payments. So you have no streamings, no royalties. So technically, uh, the cash flows and the EBITDA generated will be for the benefit of our investors and for us to keep growing the company.
So at the time of filming here, um, the year-to-date return on your share price is phenomenal, 350% or more. We've seen revenue increase 34% year over year, gross profit up nearly 7,000% year over year. Net income up to 93%. It's up to $9.5 million. Adjusted EBITDA is now sitting at 27.5 million, up over 2,200% per year. Is this an anomaly this quarter? Do you see this growth continuing? Ultimately, what kind of, if I just annualize your Q1 revenue, and I don't know if that's reasonable or not, 70 million times 4 is, what's that, $280 million. And that's like $40 million a year net income, over $100 million a year EBITDA. Is that a reasonable way of looking at it? Like how should I think about the future cash flow generating potential of this company?
That's a very reasonable way to look at it, Steve, and maybe a conservative one, because always the fourth quarter of the year is the strongest one for us. So definitely, that's that's why we call it the new Santacruz, no? Because after we acquired these Bolivian assets, and finally after we achieved this restructuring with Glencore, the company is very strong from a financial point of view, very strong on a production point of view as well, and with very strong assets in two jurisdictions where we are very comfortable working at, Bolivia and Mexico. So this is a strong company by all means. We have close to 3,000 employees, and Bolivia has been definitely a game changer for us, and we expect investors to see the company stronger quarter over quarter.
What was Glencore's rationale when they sold you guys these assets? Was it were they just not big enough for them? Why did they hand these over?
That's exactly right, Steve. I mean, for Glencore, this was a small group of mines. One of the premises they have is that their underground mines should be producing close to 200,000 tons of concentrate a year. These mines in Bolivia, all combined, they produce close to the 200,000 tons, but they are 5 mines, 3 mills, one trading company. So it's a lot of small mines to be dealing with for a company like Glencore. So that was their main premise.
So we've got 4 operating assets, as I understand it.
Correct.
Which of these is going to be, like, if one of these was your flagship asset, would that be the Zimapan mine in Mexico? And what do you see the flagship asset being 2 years from now?
That's a good question, and I like all the assets, to be honest. But to answer your question directly, I think Simapan is a very strong asset that you will see improving during this year. More you will see head grades increasing and tonnage throughput very steady, also increasing slightly, but increasing. So Simapan is a very strong asset by all means. But if in terms of profitability, you can see a Caballo Blanco, the group of mines. You have 2 mines at Caballo Blanco in Bolivia. That mine is very profitable, and in terms of robust production as well, you can see Bolivar. Bolivar is a very robust mine with a Pomabamba vein with very high silver grades. As we speak, Pomabamba has a little bit more water than what we wanted. So this last quarter, we have been managing a water situation at that vein alone, which we have already solved. So Q3, you will see silver head grades increasing again in Bolivar. So that's another very strong asset. And finally, Porco is a relatively small mine, but a mine that has been, it's like a train, no? Nothing can stop that mine. It produced little by little. It's 500,000 ounces silver equivalent on a quarterly basis, but very steady, and also increasing its profitability quarter over quarter.
So, are you guys directly responsible for the operations of the mines? Are you guys using any kind of third parties? Like, I know some companies use G mining to operate their mines, or they'll find some sort of large entity that are mine operators to come in and operate their mine. Who are you the one that's kind of responsible for everything?
That's a good question, Steve. Absolutely. We're 100% responsible of all of our mines, all of our operations, and everything that has to do around those mines. We used to have in Mexico a few contractors. We left those contractors out in September 2021. Everything is in-house, and we're very proud about our operations team. We are multi disciplinary company in that regards. We know how to run different kinds of underground mines, narrow veins, wide ore bodies, whichever you can pick. We feel comfortable running them in an efficient way.
So if I'm at home and I'm watching this video and I'm looking at the stock chart and going, this thing is exploding right now. It's had a fantastic year. The company's had a phenomenal operational performance over the last 12 months, or just the last quarter alone.
Correct.
But I want to have comfort in the share structure, because you know how these things are. When in small cap, one shareholder goes through a nasty divorce and the stock gets punished for years.
Correct.
How do I get that comfort? Who are your large shareholders? How do I feel comfortable that if I'm a portfolio manager, which I imagine some portfolio managers are actually watching this interview right now, how do I get that comfort in the share structure?
That's a very good question, Steve. And actually, well, I'm the first one, the most interested to make this share structure as tight as possible. I own personally close to 20 million shares, and together with friends and family, we go significantly higher than that number. So for us, dilution is super important. It's something that we'll be taking, always in top of our minds. So with the north of $65 million in our treasury and manageable payments to be done to finalize the Glencore um, uh, commitments, we're comfortable. I mean, we should end up the year with even a stronger treasury than what we have today. We're not planning on any equity raises at all. Actually, we're planning on putting in place a buyback share program. Hopefully, we'll do that.
The opposite.
The opposite, exactly. Yes. So for us, the share structure is very important, and it's something that we want to take definitely in mind always.
Okay, Arturo. I'm going to wrap it up with this question for you. If I am, say, an investor who's looking at you guys, I'm kicking tires, and I am saying, okay, maybe I want to hop in, I go, okay, what am I expecting over the next 12 months? The stock has a lot of momentum. I want to see that it can sustain itself up here. What kind of news flow am I looking for? How do I judge management? What does those sort of key milestones for the company look like over the next 12 months?
Yes. Well, we're very oriented, Steve, very focused on our operations. First of all, we want to deliver the best of our mines. We want to get the best out of our mines in terms of production and efficiencies, right? So that's our first priority. Second, and also same as important, fiscal discipline. We definitely want to be very disciplined with our treasury, with our balance sheet. As I was pointing out, we have north of $65 million in the treasury and only $15 million to amortize the full Glencore payments. We can do it tomorrow. But why? We rather be disciplined I mean, we already have an agreement with a group that we, I mean, respect by all means. So we're just walking the talk. We'll make those payments on time and amortize them. In the meantime, we'll keep increasing our treasury. So our approach, it's discipline in terms of our balance sheet and P&L around all the administrative issues related to the company. And also important milestones. We, as I was pointing out, we are going to be putting in place a buyback program in the next coming months. We're going to graduate the company to the big board, to the full TSX, and eventually we'll go listing to the US. So our focus will be very basic in that regards, in the sense that first things first, and with a different discipline approach towards the business. So people can expect a stronger company quarter over quarter with all those things combined, and I'm sure this will be a strong company for investors to feel comfortable with.
Well, Arturo, thanks very much for hopping on here. I congratulate you on all the success you guys have been having for someone who invests in the space and works in the space. It's great to see companies that are executing. It's something that we need more of, because that's going to bring more investors in, and a rising tide lifts all boats. And I think that you guys have done a phenomenal job. So I appreciate you taking the time to hop on here, and let's do this again as you guys continue to execute.
Thank you, Steve. Thanks for having me here. And it's been a teamwork. Everyone, since our miners in the ground to everyone in the company, of the board, everyone has been doing its part, and we'll keep working towards making this company a stronger one, to recognize those investors that are putting their trust into us, into the management. We will not let them down. We'll keep working hard for each and every one of our investors. Thank you for having me, Steve.
Thanks, Arturo.
My pleasure.
All right, everybody. Thank you for watching. If you enjoyed this interview, do me a favor, smash that like button, subscribe, and ring that notification bell. All right, everybody. Thanks for watching.